Okay, we're going to look at 2-1B, entries for cost in a job order cost system. Okay, Royal Technology Company uses a job order cost system. The following data summarizes the operations related to production for March. And there is A through E. If you have an actual textbook, if we pop up to the top, F through I. Instructions, journalize the entries to record the summarized operations. Okay, so we're just working in a general journal here. If we look at letter A, we've purchased materials on account. Okay, purchased materials on account. So if we go to our journal, move this up here, the date, I'm just going to put the letter A. We've purchased materials, so we're going to debit materials because that's what we're getting here. And it says it was for $770,000. It said on account, so we now owe them that amount of money. So we're going to credit accounts payable to show that we still owe that money. And again, $770,000. Okay. Letter B, materials requisitioned $680,000, of which $75,800 was for general factory use. Now remember, we talked about materials that are being used as part of the product become work in process. Materials that are general should become factory overhead. Okay, so letter B, we've asked for materials from the materials inventory, so we're going to debit work in process. It's a technology company, so depending on what we're making, we're asking for different pieces that we're going to need to create something. So it gives us a total of $680,000. So we're going to take that $680,000 and we're going to subtract the $75,800 that was for factory overhead, that was for general use. And when we subtract those two numbers, we get $604,200. And this becomes the number we use for our journal entry for work in process. Oops. $604,200. We're also going to debit factory overhead for the difference, for that $75,800. Now, since we've requisitioned these materials from the materials area of our factory, we're going to credit materials to show that we've removed this much of material from that area. So it was a total of $680,000. Okay. Letter C, factory labor used $756,000, of which $182,000 was indirect. Again, that indirect labor, that's going to go towards our factory overhead. So again, we have letter C, work in process. Our book told us that our total was $756,000. We're going to subtract the $182,000, which was the indirect, the factory overhead. And we get $574,000. This becomes our work in process. We're also going to debit factory overhead to show that we've incurred that $182,000. And since we're talking about labor, we're talking about wages, we're going to credit wages payable, because we need to pay that bill, and that was for $756,000. Okay, letter D, other costs incurred on account for factory overhead, $245,000. Selling expenses, $171,500. Administrative expenses, $110,600. Okay, so we need to record all of these costs. Okay, so the first one was for factory overhead. Whenever we incur factory overhead, we're going to debit it for $245,000. That's what your book tells us. And then we had selling expenses. We always debit the expense unless we're closing the account. Okay, 171,500. And administrative expenses. $110,600. We need to pay all of these, so we're going to credit accounts payable. Again, your book said that they were incurred, not that they were paid. And when we add all of those numbers together, we get 527,100. Okay, letter E, prepaid expenses expired for factory overhead, 24,500, selling, 28,420, and for administrative, 16,660. Okay, so anything that we've prepaid, could be our insurance, it could be our supplies, it could be anything like that. Okay, so letter E is going to be very similar to letter D. We're going to list these out. Factory overhead, for 24,500. Selling expenses, $28,420. Administrative expenses, $16,660. Now it says they are all prepaid expenses. Okay, so we're going to credit the prepaid expenses account to show that we're moving the amount out of prepaid expenses and into their individual accounts. And if we add those three numbers together, we get 126,200. Okay. Now, letter F. Depreciation of factory equipment was 49,500, office equipment 61,800, and office building 14,900. Okay, now anything that has to do with the factory is going to be considered part of overhead. Other depreciation just goes into our depreciation expense account. So we are on letter F. So factory overhead for 49,500. Depreciation expense for our office equipment is going to be 61,800. Depreciation expense for our office building is going to be 14,900. Now, even though we put this in factory overhead as the debit, we're still going to put this amount as a credit to accumulated depreciation. It's still depreciation even though it's a factory overhead. Okay, so we're going to credit accumulated depreciation for office and building and when we add those three numbers together, we get 126,200. Oh, I made a mistake up here. Pulled the wrong number. This one, if we add those two numbers together, not going to be 126,200. This one's going to be 69,580. Sorry about that. Okay, letter G, factory overhead costs applied to jobs, 568,500. Okay, so again, factory overhead cost applied to jobs. So they took whatever was in that factory overhead account and they've moved it to apply it to specific jobs. Okay, so we're going to take money out of the factory overhead account and put it into our work in process account, just to move it from one spot to another to show that this amount of money has been applied to specific jobs. Okay, and it tells us that the amount we're moving is $568,500. So since we're moving it out of factory overhead, we're going to credit factory overhead for $568,500. Letter H tells us that we have jobs completed for $1,500,000. So what that means is we have $1,500,000 worth of costs that are moving from our work in process into our finished goods. They're no longer things that are being made, they're things that have been made. Okay? So we're going to debit our finished goods for the $1,500,000. And we're going to credit work in process for the $1,500,000. Just to show that it's no longer in process, it is now finished. So we've taken it out of the work in process account and put it into the finished goods account. And then last but not least, cost of goods sold, $1,375,000 for letter I. So in this case, we're moving that cost that we've been tracking all this time from our finished goods into our cost of goods sold. Okay, we no longer have these items in our inventory. So finished goods is our inventory that we're ready to sell. We no longer have it in there. We've sold it, so we need to move it to cost of goods sold. So we're going to debit cost of goods sold for $1,375,000. And we're going to credit finished goods. Whoops. So again, we're moving it from our finished goods account into our cost of goods sold account because we've sold it. We no longer have that amount. Okay. Okay, you can go ahead and head back to your PowerPoint or on to the next problem, depending on where your PowerPoint sent you.